Hello friends, today we will discuss about candle patterns. So whenever we are talking the candle patterns, it is mainly because of the set of candles or group of candles will make a one typical or characteristic pattern which will decide the next following movement of the stock or any instrument. So before going to that, we will see a few points regarding the basic nature of the candles. Whenever I am telling a candle, the candle may be most of the time the used are the green colors ones and the red color ones. Traditionally, the green color was used, the hollow candle, and the red candle was the traditionally black colored one. So whenever we see a typical candle, it is having certain parts like high, close, open and low. For example, take the green candle, which is also called as bullish candle. So in the bullish candle, the low is at the lowermost part of the candle and high is the highest point in the candle, and there is a strong body which is consisting of open and close. And in bearish candle, that is the red one, so it is also having the same parts, but it is just a inverted bullish type. So here the low and the high are as are seen in the figure, but the body is made up of open, which is above, and close, which is below. So these are the parts of the candle. So how these candles are formed? What is the reason to form these different parts of the candle? The reason is that whenever market opens, not only market opens, whenever the candle starts at that particular time, so there are some buyers with respect to bullish candle and there are some sellers with respect to bearish candle. See here we have to note down that each candle is nothing but it's a tug of war between buyers and sellers. If there is a bullish candle is formed or a green candle is formed, that means what? The buyers in that stock or instruments are dominating the sellers. And what is the reason for formation of the red candle? It is because of the sellers who are dominating the buyers. That means the stock or the instrument is being sold more. The different candles forming in the stock reliance in day with day time frame we are discussing this. So here we are having a different candles forming throughout this movement of the stock. Meantime, if you notice, there is a change in the trend. See here the bullish movement reversed here and the trend changed. Same here, trend changed, and same here, once again here, and once again here, and once again here. So like that the stock is moving with change in the trends. So can we use the study or knowledge of the candles to identify the different trades possible? So before that we will try to understand how the different candles are formed throughout the movement of the stock. So we'll start from here. So here the bullish candle, as we discussed, it is a green, and small candle, this one is the previous one is the bigger candle, the second one is small, then red candle, once again the bigger green, that is a bigger bullish candle, then smaller one, bigger red, smaller one, the bigger red ones, like that. So what makes the change in the size of the candle? So anything it is related with the movement of the stock, or anything it is giving us information regarding the buyers and sellers present beneath the movement? Yes. The size of the candle is also determining the proportion of the buyers or sellers present in making that candle. If I am seeing this one, the green candle, so it is a relatively bigger one, that means more buyers are present. And if you see the previous one, that is also almost the size of the green candle only, but it is dominated by the sellers, that's why it is red candle. And if you see this two, if you see these two candles, so any pattern can we make out? Yes, the green candle is almost piercing the previous red candle, so this is called what? The piercing or engulfing pattern. So green engulfing the red candle, so this is called bullish engulfing pattern. And because of this bullish engulfing pattern, so there is a change in the trend, and now the downward movement has changed into the upward movement. Yes. Now at this peak, so please note down, so whenever you are looking at the candlestick pattern, always you try to analyze the candle pattern end of the trend. So here the trend is ended. Why I am telling this trend is ended? Because once again there is a formation of reddish candle. This one is also reddish candle, but the trend has not ended, because the next candle is what? Green candle. So trend continued, whereas here the after reddish candle, the next to this reddish candle is once again the downward reddish or bearish candle. So this means the trend ended here. And when you see this, now it is just reverse of this, the trend we saw previously. So here this is the bearish candle or the reddish candle is engulfing the previous green candle, means this is a bearish engulfing pattern. So because of this pattern, there is a once again the downward movement started, and the downward movement started till this. So once again bullish engulfment started. So here this is one other type of pattern, so we will discuss that with seeing the different chart. Here one more type, here one more type, and here one more type, and here one more type. So we can find different type of candle patterns. So here one more type, here the typical bearish engulfing pattern, and here this is a harami pattern, so in which the body of the second candle lies within the body of the first candle. So after bearish, so there is a bullish candle, so this is a bullish harami type of candle. Yes, you can see here one more. So one more pattern here, one more pattern here. So let us see this. What are the different type of patterns which can decide the change in the trend? So whenever the candle is formed in the first row, that is called doji. Doji is having highs and lows, slender highs and lows, and slender body. So proportionately, if you see in the candle, the body is almost negligible of size or thin in size, whereas legged or hairs are bigger, more than 50 percentage. The second one, bullish engulfing. So in bullish engulfing, the bullish candle or green candle is almost engulfing the bearish candle, and it opens lower and closes higher than the bearish candle. In the next bearish engulfing candle, it is just opposite to bullish engulfing. It opens higher and closes lower. And there is one more type of candle called as hammer. So to call a candlestick as a hammer, it has to be the hair or the leg has to be 2 times longer than the body. It may be a green candle or it may be a red candle. Then shooting star. Shooting star is just opposite to the hammer, present in an inverted style, and always it is present at the end of the ongoing trend. Whenever there is a bullish trend and top of that, if there is a appearance of the candlestick which is having 2 times longer leg or hair compared to its body, the body may be the red or body may be the maybe green also. This decides there is a reversal of the trend. Then comes bullish harami. So bullish harami. Harami means what? In Japanese, it is a pregnant. So it is like a pregnant lady. So pregnant lady, whenever we are having 2 candles, the second candle must be having a smaller body, and the formation of the candle should be within, and it lies within the body of the bearish candle, and it opens and closes within the length of the previous first candle. Bearish harami. In bearish harami, compared to the previous candle, it opens and closes within the length of the first candle, and it forms at the top of the bullish trend, and it reverses the trend. From there is a downward movement starts. The hanging man. Hanging man is almost like a hammer which has formed at the top or at the end of the bullish movement. So whenever there is a hanging man, how to identify this? Once again, same like a hammer, it is having 2 times longer leg or hair compared with body. The body may be red or the body may be green. It doesn't matter. Then evening star. So what is this evening star? So evening star is the pattern of the candlesticks in which there are 3 candles present. The first candle and the second candle almost they are of almost same size, and they open and close almost same most of the time. And the third candle which is formed in between these two is formed above. So little bit gap is present between the first candle and second candle between the third candle there is a gap, and the pattern is such that the third candle close at least half of the candle of the first one, minimum half, it should be minimum half. And morning star, which is exactly opposite to the evening star, among the three candles the second candle is present now below the first and second candle, and the criteria is same. The third candle should be at least half covering the first candle. Then one more important, dark cloud cover. So in dark cloud cover, the bearish candle compared to the previous bullish candle opens higher than the previous day close if you are seeing at the day frame, and close at least covers it, at least covers half of the previous candle. The piercing pattern is also the same, the only the terminology used because the piercing happens from below and dark cloud covering occurring from the above. Then inverted hammer. So in inverted hammer it is just opposite to shooting star, same criteria is used. Whenever end of the bearish trend, if there is a candlestick formed with 2 times longer hair or leg compared to the body may be green or may be red, doesn't matter. So this also gives reversal of the trend.